back. Another week of sharing the journey to financial wellness with you. I'm Chuck Wade. My brother Ethan is here as well. Two bald financial advisors. And this is our podcast. And today we're going to talk about investing in artificial intelligence. This is a topic that is both fascinating, exciting, terrifying, incredibly risky in some cases. And so I know it's something we've talked a lot about with a lot of folks. And I wanted to
well, it's everywhere.
It's
everywhere. A hot button topic.
Whether we know it or not. And there's a lot of applications that I think AI have that are like, yeah, this is really good. It's helpful. One being, my older daughter, Charlotte, has a clay bead making business that she started when she had a minor surgery earlier this year. She's recovering for a few days, needed something to do. Wanting her off of screens, she started making these clay bead bracelets, and she wanted to come up with a name for the business. So we're sitting in the living room, and I pulled up ChatGPT and said, let's ask AI for a business name here. And this is what I typed in. My daughter is starting a bead bracelet business. Her name's Charlotte. She wants a name that sounds fun and exciting. What are some name ideas for her business? Seconds. We had 10 names. One of which, number 4 on the list, was Charlotte's Colorful Creations, and that's the name of her clay bead making business, which is quite profitable, I should say. But that
ChatGPT coming
yeah,
through.
and you know what it did? It did the thinking for us.
Well, that's kind of the
did
point
the brainstorming for us
of AI. It's meant to take data and computer science and try to solve problems.
Yeah.
Or for some people, they think that may end up taking over the world eventually. But it's something that on the surface is fascinating and has an application across almost every single industry in existence. But it comes down to how's it going to be used, and then the conversations that we're having a lot. How are you able to invest in this? How are you able to get part of this in your portfolio so that you have some exposure, that if the potential for growth, as many people see it, pans out, that you're able to participate in it?
How often does it come up with you in conversations that you're having, would you say?
Maybe a couple times a month.
Yeah.
I don't know. I mean, you hear it. It depends around what's happening in the news cycle. When the big technology companies are reporting, like a Microsoft or a Google or an Amazon, and they're talking about how the growth part of their business all rests in artificial intelligence. It's more in the forefront of the news then. But it's certainly a conversation that for the more growth-oriented clients, they're very much interested in that.
I find it there's always something that people are curious about investing in.
Yeah.
It was cannabis a couple years ago, right? People were wondering, well, how do I invest in this? There's always something that people are kind of wondering about, but don't really know the best way or the most efficient way or the most appropriate way to do it. And this is where I think we can come in with some value and talk about what are some sustainable ways that anybody could consider investing in artificial intelligence, because the reality is that the field of AI and robotics will look significantly different 5, 10, 15, and 20 years from now than it does today.
Yeah, that's just technology as a whole.
Yeah, but it's still relatively new, and there's companies that are involved in software that are manufacturing or applications on the cloud or processes, and then there's companies that are involved in hardware, the actual tools and technology, and
there's companies involved in the real estate of owning the data centers that help provide the infrastructure for it.
There's so many different ways you can invest in artificial intelligence. It's very easy to get overwhelmed by it and also wonder what's the best way to do it. And I think this is the field right now that some people look at and see that is a way I can make an investment and get wealthy off of it. Now, I don't know if that's the case or not. I do think it's an area where there's certainly a lot of potential. And where I think some information and understanding can go a long way in terms of helping folks understand, well, what is it? How do we invest in it?
Yeah, and how do you manage your risk?
Right. Yes, because that's different for everyone.
Yep.
And even someone who is in their 50s or 60s, I don't think it's inappropriate for them to be investing in this in an appropriate proportion.
Yeah.
And
I mean, 50s, 60s, 70s, 80s, as long as you have an appropriate proportion. That's tough to say.
Yeah.
And you don't go crazy with it. It can be a perfect application for people who are looking for a little bit of growth when it's done the right way.
Yeah. Now, here's the thing that you might find interesting. If you are investing, if you own pretty much any mutual funds or exchange traded funds, you've already got AI investments.
Yes.
You absolutely already have them.
Yep.
Without even knowing them. And it's right there. If you look at the top 5 performers, the top 5 performing companies in the S&P 500 this year, which, by the way, are responsible for almost all of the growth. That index is up between 15 and 17% right now on the year. Apple, NVIDIA, Microsoft, Google, and Meta, which is Facebook and Instagram, are all involved in some way, shape, or form in AI.
Yep.
There's a ton of other companies involved in it too, but the big 5 are heavily involved in it.
And a majority of the other ton you have never heard of.
You have never heard of, nor would you have, nor should you have. But you likely already have it if you have any stock, mutual funds, or exchange-traded funds. Let's talk about how some strategies and ways to try to invest in it.
So you mentioned kind of the goal or idea of building wealth, and doing that in an area like artificial intelligence. The best way to grow the most potential for wealth would be doing it with trying to handpick the individual companies who are going to change the landscape forever. But the likelihood of being able to do that, because of the ones that probably will come through it, probably almost nobody's heard of yet. Mm-hmm. And we don't even know what those companies are or what they will be. And so the chance of you being able to handpick those, not overwhelmingly high. The chance that maybe you pick some of the other companies that might end up going bankrupt in the quest to, building out the AI platforms, that's possible. It's not, it's not 100%, but you take the same amount of chance as you do picking the top winner for it. So, we often look to the past, and, NVIDIA, which is probably the company most known for artificial intelligence, this year is up 200%. Now, bear in mind that last year their stock had cratered and had been hit really hard. So not only do you have to pick the right company, but you have to ride through the ups and downs, which on the surface sound a lot easier than they are when you're seeing the valuation of that company get absolutely hammered.
Well, think of a company like Apple that went public in December of 1980 and is probably one of the best investments of all time. It's up approximately 150,000% since it went public. It lost 50% of its value in one day in the tech crisis in the early 2000s. From 1992 to 1997, lost, I think it was 80% of its value when Steve Jobs was no longer with the company for a period of time. Would you have been able to ride out those two swings if you own the individual stock? We all like to think we would have, but the reality is, if you've got a stock that goes down 50% in one day, you're probably second-guessing making that investment. And wondering what do you do going forward. So, look, it's great to think, I'm going to buy it and I'm going to hang on to it. I would argue that the chances, if you're picking individual companies, your odds of picking one that goes belly up are better than picking one that's a home run.
Oh, sure. More companies will go belly up than the ones that will end up hitting the home run.
That's in any sector.
Yep.
And so I think of it like this, is that if you're building a house, you want your house, you want the basement, you want the foundation to be really solid. It needs a kitchen, all right? You need a living room. You need quality bedrooms. But then I think of the AI in your portfolio as if you're, maybe it's the man cave in the basement, or you've got a room that has a special purpose or utility,
it's
or
a pool in the backyard.
A pool in the backyard, right? It can add real value, but you also don't want to do it cheaply. You don't want to just pick the first or the easiest way to do it. You want to make sure it's done well. And if done well, it can generate and create significant long-term value.
Because if it's not done well, it can do the exact opposite.
It becomes
for you.
a complete nightmare.
A complete money pit and a nightmare for you.
Right.
And that's where, one benefit that investing now has are what are called exchange traded funds. Very similar to mutual funds, almost like they're cousins, where they allow to get very specific in the type of investments that you're looking to choose. Now, the benefit of an ETF, exchange traded fund is ETF for short. ETF is short for exchange traded fund.
There you go.
Is that it allows you to get exposure to hundreds of companies that are specifically in artificial intelligence and robotics. if you wanted to make such a specific investment in one particular industry without having to take what we would call individual company risk. That's the risk that you pick the one company that goes belly up. And so this allows you to still have diversification. It would still be a risky investment for you to have because of the infancy for which artificial intelligence and robotics companies are in.
Yeah, it's definitely on the more aggressive end of the spectrum.
Yep. But it allows you to eliminate individual company risk, and instead you're buying into the industry and the concept as a whole, which will not give you the home run potential that if you pick the one company that takes off, but it will also help insulate you from the one or three companies that will go belly up and will lose all of your money for it.
It's as if you're in a neighborhood and you're wanting to invest in real estate. You can pick a house in the neighborhood and buy that one house and use it as a rental, or you can try to invest in the neighborhood as a whole. The thing with a lot of these funds is they can be very specific to AI, and they can be very specific to just about anything.
Yep.
There is an ETF for just about anything that you want to find to invest in. But a lot of these, as like you said, as opposed to owning, one company, they own 80, 90, up to 100, 200 companies. And even though they definitely fall on the more aggressive end of the spectrum, they provide a lot more quote unquote protection from one of these companies going belly up. You could, but here's the thing: if you're thinking, that might be too aggressive, okay, I wouldn't worry too much about it. If you own investments in the S&P 500 or any tech mutual fund, you have companies that are involved in artificial intelligence and robotics.
To clarify, we wouldn't worry too much about needing to get a specific investment based on that. You wanna understand your risks and what you're comfortable with, but your point there is AI is in pretty much every technology investment.
It's in just about everything.
Right.
The other reason that sometimes these funds are more appropriate options is that there is a huge semiconductor industry in Taiwan. We can't go buy individual stocks that trade in Taiwan or trade in Germany or trade in the United Kingdom. A lot of these funds are able to acquire international companies and have them in their funds as well, so they can often provide you exposure to investments you wouldn't have otherwise. And there are more and more AI funds coming out. The one thing that, as I was researching this, that I would stay away from, you may sometimes come across a fund that has a 2x at the end of it or a 4x at the end of it. Stay away. Avoid like the plague.
It means it's leveraged, and the 2x means your returns are either multiplied by 2, but that goes in two directions. Your returns to the upside are multiplied by 2, and your returns to the downside are multiplied by 2. It's important to remember, regardless of the investment you get in this, it's still going to be aggressive, and it's still going to be risky. And then, in turn, multiplying that risk to the upside or the downside takes it to a whole nother level.
Yeah,
literally.
It really does. If you're a race car driver, you still have to wear a seatbelt. Those cars are some of the safest vehicles made on the planet, and there's a reason for that. And
you still have to slow down around some of the turns.
There's a significant amount of risk involved in what you do. You don't need to be more risky or put yourself at greater jeopardy. And so those are things too that when you are multiplying the return, boy, it's great if it works out.
Yep.
But again, we also in our minds project out. I would. That's just if you sell it when you're at the peak.
Yep.
If you don't, they can go down. They can drop quick. So,
and often we don't even know that you really do have a lot of it. I mean, the S&P 500, almost 30% of the companies there are technology companies,
right?
And a very strong majority of those technology companies, of which there are 8 of the biggest holdings in
8 of the top 10
index, all have exposure to artificial intelligence for you already. So a lot of it is already baked into likely a fair amount of your portfolio. Sometimes we just don't even know it.
And sometimes you need to figure out what is appropriate for you. And that can be a conversation.
I'd say always.
Yeah,
always need to figure that out.
Good point. What's appropriate for you? It may not be appropriate for someone else. We've talked about that, not listening to what other people say about what they're doing with their investments. But it's a great conversation point, and it's a good thing to ask your advisor about is, hey, do I have any AI in my portfolio? I'd be interested in owning some. I'd like to have a little more. What are some ways that I can do it? And I've had clients say, I'd like to be a little more aggressive. And I would say, great, let's do it this way. And we're going to do it with a fund versus trying to pick 3 or 4 of these, because there's just too much. There's just too much that can go wrong with taking that approach.
Yep.
Investing in AI can be exciting. It can be terrifying. The best way to do this is different for every single one of us. And with any investment, make sure the decision's appropriate and correct for you, not what someone else says worked for them. Thanks for joining us.